India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's the last trading session for the week coming out of a market holiday, and it is looking good. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surubi and Nigel. Guys, hi, good morning.
Hi, morning, guys. So I'm in a string of positive global cues, data, markets looking good, green. So I'm wondering if it's going to be a happy Friday indeed.
Well, it's always good, to have a holiday preceding as well as post a Friday. So we're coming in there, bat for a few hours, and get back into the weekend. So
nice.
That's pretty good. And the global setup's looking much better as well.
Yeah, absolutely. And, what a turn of things, right? In a fortnight,
Yeah.
we wwent from crisis mode.
The world is ending to wow, we're happy again.
I'm using the word Goldilocks again. So you can imagine how...
You're saying Goldilocks ran away, now she's back.
She's back. She's back in the house. Well, let's just quickly tell you where we are at, right? Because you've got a lot of ground to cover, but in a good way. So U.S. markets gained for the sixth straight session. 6 days on a trot now. Both the S&P and the Nasdaq have been higher and higher. It's been making newer highs. Last 2 days, actually, you could just look at the yesterday's session, because the day before, because you got to get to 2 days worth of action, because yesterday was a market holiday here. But the big session was last night. 2% approximately across the board on the S&P, on the Nasdaq, and the Russell 2000, which is the small cap index. The CBOE Wix is back to the pre-jobs data level. It's back to where it was around on the 1st of August. 2nd of August was that, the non-farm payrolls data, the jobs data, which triggered a crisis. And after that, on the 5th of August, the CBOE Wix went up to 65. So from 65, in the last 8 or 9 trading sessions, it's back to 15.23. These are humongous moves we are seeing. And you look at the S&P 500 itself, the largest 500 companies in the US, they've added nearly $4 trillion in market capitalization since the 5th of August bottom. This is a complete 180-degree about face, if there was one. The nature of the rally, of course, is supported by the Goldilocks nature of data. And what is that data? You had basically the CPI numbers day before yesterday, and last night you had retail sales data which came through. So what it's essentially showing is that inflation is slowing down, but labor market is healthy enough to justify rate cuts. It's like this is where the market was at a few weeks ago, before that job scare. The labor market data really scared the living daylights out of markets for a few days. So you're basically back to that same narrative, which is, the immaculate kind of disinflation, which allows the Fed to gently lower interest rates. So the data itself, core CPI rose about 0.165%. This is in line with consensus, which was 0.2. Retail sales, which beat on all measures. You also had initial jobless claims, which have dropped now to 227,000 as compared to 235,000, which was the poll, which was the consensus expectation. This is really good news. Basically, recession fears have been pushed back, and how? From market talking about how you need emergency Fed rate cuts, 50, 75. 75 was a done deal 10 days back after that jobs data. You're basically looking at a more benign environment. A rate cut, absolutely, in September, but a smaller one at that. Last 2 days, what have bond markets done? The 10-year yield is up 8 basis points. We are back at about 3.92. Largely, this growth scare has been pushed back. Yields have moved up. And you also have dollar index, which is now back above the 103 level in a good way once again. Oil trades just under $81 a barrel. Actually, the moves last 2 days cancelled themselves out. So we are, from where we left off, not very much change. Sentiment here in India, it may not seem like that, because it's been buy the dips, and the mood has been, the trajectory is up, etc. But sentiment has turned a little too bearish, especially when you contrast this against the global rebound that we've had. So keep that in mind, and we can talk about how the number of stocks on a MACD basis which are giving a buy signal. I think there are less than 10% of stocks which are doing that now. You could look at things like the RSI, weekly ones, and other indicators. So sentiment is a little too bearish, especially in the short run, and you got this global rebound. Now, the levels, Nifty needs to hold the low of 24,079. That's the first number. And then, of course, the swing low, which is 23,893. These are the two levels the market needs to hold. The swing high of 24,472 is the first one, which I think will sort of propel the market and give the market some momentum. We need to take it out. And of course, the 20-day moving average as of day before yesterday's close is 24,490 now. It's come off a little bit as compared to where we were on Wednesday. Now, Bank Nifty is the clear laggard. It tested the recent low. By the way, it's once again tested the recent low of 49,659. And then, of course, there was a bit of a bounce. We left off at 49,727. Here, the big support is only at 48,860 now, which is, I mean, of course, it'll be great if this 49,659 holds. It has so far over the last 6-7 trading sessions. But if that goes in a convincing way, then you're looking at the 61.8% retracement of the entire move from the lows, the 4th of June election low to the all-time high recently. And that is 48,860. And on the upside, the immediate resistance, which the Bank Nifty needs to take out, is 50,830. Will the global market help us achieve some of that? I think that remains the question. But I think, to my mind, sentiment is has turned a little too bearish in the short term, and that sometimes provides that fillip. 180 points higher is what the GIFT Nifty is indicating at this point in time. Surabhi.
And Prashant, I was just taking a look at the level. Wall Street has recovered after the Manic Monday fall. All those indices are above that Monday's levels, but we haven't. I just checked the Nifty low of that day. The Monday when the world was selling off and it seemed like between the yen carry trade and the US jobs report, everything was crashing and ending. That day, the Nifty low was 24,686. So we're still some distance from, those kind of levels. So let's see if that recovery can really kick in, because the data has been very, very positive, as Prashant also pointed out. So just, to go over those numbers again, you've got the US inflation number, the headline inflation number at 2.9%. This is a year-on-year comparison versus 3%, which is what the market had in mind. That retail sales number, again, to just put the number on the screen, 1% versus estimates of just about a 0.3% sort of an increase in July. So retail sales, the engine of the US economy, really firing through consumer. Not just that, we had great data out of Japan as well during the holiday yesterday. The GDP number out of Japan was looking very strong. 0.8% higher year-on-year versus estimates of 0.2, 0.3%. So Japanese growth is firing, and it's a different matter how the central bank responds to it because of other issues. But anyway, the numbers are looking good. So the first question is that will our underperformance, this rank underperformance in the last fortnight, will this start ending now? Let's see. Fund flows, nothing much has changed. It's the same picture. FIs are still selling. DIs are still buying. The selling from FIs was close to 2,600 crores on Wednesday, offset partially by the FII buy number. Now let's get down to corporate action. There's plenty of it to look at. I'll watch for PSU banks for two reasons. One, because some of them are actually hiking lending rates, which is quite interesting. Both IOB as well as SBI announced a hike in lending rates between 5 to 10 basis points across different tenures. So let's see how these stocks react and what the interpretation is. On a side note, the Karnataka government said that it has decided to stop doing all business with SBI and PNB, which is a little strange. You don't hear that. There's some talk of wrongdoing and perhaps some wrongful allegations and some illegal fund transfers with those state government finances. So that's been the back and forth. Let's see if there's any sort of a sentimental rub-off impact, because anyway, PSU banks have been underperforming. Lots of corporate action. There's the Vedanta OFS that's going to kickstart today, so need to watch out for that. Then, of course, we'll have Ola Electric in focus as well. So the good news on Ola is that the top line continues to grow, but the losses are still there. Losses have expanded at the bottom line level. But the management is saying, we'll tell you more about this in a bit, management is saying that at least in the auto business, they're very close to a EBITDA break even. And then, of course, there was a bike launch. So we'll look at Ola and how the market reads that. Last but not the least, not such great news on the aviation front. It's looking very turbulent for SpiceJet. None of the commentary is good. Numbers we'll get to, and numbers are not that great. I mean, it's top line onwards, basically everything is falling. There is a profit, but the auditor report says that the profit is because of higher other income. And if it wasn't for this big other income, the losses are pretty huge for Ola. Beg your pardon, for SpiceJet. Not just that. The auditor's report is saying that the accumulated losses are about 7,660 crores, completely wiping out the airline's net worth. And there are issues about the ability of this company to continue as a going concern. The auditors are noting that they have also defaulted on a lot of regulatory operations. We know what happened with the Mumbai airport just a couple of days back. So, I mean, the stock apart, this is not good news. Another airline running into turbulence, not good news for us as, flyers and passengers as well. So let's watch out for this. But I think plenty of corporate action as well to keep us busy. But let's hope that the start is positive with the global cues.
Well, that's right. The global setup actually is looking quite good. The S&P 500 as well as the Nasdaq, they're on a 6-session winning streak. And now the US markets, all three of them are trading above the August 2nd low. So, that's encouraging. The global setup is good. The stage is set up. The Nifty could have a good session. Keep in mind that the Nifty on August 2nd was at around 24,700. So we're still a distance away from that level, and global cues have recovered. So let's see whether or not we can participate. What about the FI positioning? They're net short yet again, close to around 30,000 contracts on the short side. So we have some shorts in the system, which is something we normally like. The clients, they continue to remain net long. Just 10 sessions or so ago, they were net short with close to 50,000 contracts. Now they're net long with close to 90,000 contracts. So they are the ones that have been getting the market direction right. Let's see how that goes on that front as well. Pulling up the options data. The PCR, well, it had moved to around 0.75 just around 2 sessions ago. That's recovered to around 1.1 odd. So now it's pat in the middle of that range. 2 strikes that were active on the call side, 24,200 call, 24,400 call. Both of them were seeing a fair bit of writing. And the 24,000 put as well did see some bit of writing. Now, since the 24,200 call did see some addition, I'll keep an eye out on that strike, whether there is some unwinding, given that we see a bit of a gap up in today's trade. So that's going to be a crucial mark. The Nifty, if you're looking at levels, well, the Nifty is pat in the middle of the 20 as well as the 50 DMA. So you'll want it to gradually move back to around the 20 DMA, and that's what will give bulls further confidence on the technical side. Because even when we're getting a positive global handover, during the day you're seeing some kind of selling. The resistance zone, though, going by the options data, is around 24,350, 24,400. If we can close somewhere around this level, the bulls will feel very, very good because those bounces are being sold into, which is a little bit uncomfortable from a bullish perspective. What about the Nifty Bank? Well, that's moved down now. It's moved to around the 100 DMA, very, very close out there. You don't want this level to break. Otherwise, we could be bracing for a sharper correction. And resistance, last week, we went numerous times around 50,700 to around 50,800. But since recession fear seemed to have subsided, at least in the last few sessions, 2 sectors I'll track. The tech index did well even in Wednesday's trading session, so we'll keep an eye out on that, given the rally that we've seen in the Nasdaq, more than 5% up in this week itself. And the metal index that's been underperforming, maybe that Supreme Court verdict isn't as bad. And in fact, the Qs overnight as well quite good. So both these 2 indices we're looking at. And F&O stocks, we've been highlighting this. Now you have close to around 19 stocks that are in the F&O band. That sometimes doesn't make you feel very, very good. But that's the texture of the market as of now. So a lot of stocks, I've not seen this in quite a while.
Absolutely. Well,